Did you know that you can get a home loan for 2% below the going rate? Getting a lower interest rate is a fantastic way to own a property and to actually get your investment money working for you. Hi everyone, if we haven't met yet, I'm Troy Sage, local realtor, and I'm dedicated to doing real estate differently. And I've been helping people just like you for over 15 years buy and sell real estate. In this video, I'm going to talk about the interest rates, how to get a home loan for 2% below the going rate. And I'm not talking about something that's flexible, that's going to change all the time, and a strategy of how you can use a technique to pay down your loan quicker and faster than ever before. So stay with me and let's dig in. We're in the second week of November 2023, and if you go to Google right now, you'll see that interest rates are hovering between 7.5% and a little bit more than 8%. Keep in mind that the interest rates fluctuate depending on your debt to income ratio, and more importantly, they're going to fluctuate according to your credit. So if you have really good credit, you're going to get lower rates. So how do we get the interest rate lower if you're thinking about buying or refinancing? There are several different ways to do this, but let's talk about number one, and that is actually buying down points. Let me show you how this works. Each point the borrower buys costs 1% of the mortgage amount. So 1 point on a $300,000 mortgage would cost you $3,000. But 1 point does not bring your interest rate down 1%. It is a portion of 1%. Let's go a little bit deeper. For each point that you purchase, it's roughly 1/4% or 0.25% of the interest rate. So in this example, if you're borrowing $300,000, then 1 point is $3,000. And if your interest rate is at 7%, it's going to drop you to 6.75%. Not a big deal in the grand scheme of things. But let me show you how to drop it a full point or even more on a permanent buy down. So if buying 1 point brings it down 1/4%, then it would be 4 points to bring it down 1 full percent. So if your interest rate is 7%, you would have to spend $12,000 to bring it down to 6%. Now, if you have any questions about this method, leave a comment below or reach out to me direct. My information is in the description below. A good thing about buying down your points on a fixed rate mortgage is that when you buy them down, they stay the same for the life of the loan. Now, let's talk about another way that you can bring your interest rate down 2%, which is called a temporary interest rate buy down. Here's how the temporary buy down works. First of all, you have to qualify at the current rate today. I'm not aware of any way to qualify at a lower interest rate unless you're paying a lot of money down, over 25%, and you're buying down the rates permanently. Let's dig really deep into this temporary buy down type program. With a temporary buy down, the cost to bring down your interest rate is much less than a permanent buy down because it is truly temporary. The most common that we're using in the market today is a 2-1 buy down, which means that it brings down the interest rates 2% and goes up 1% a year until it actually hits where our rates are today. Here's how it works. If interest rates are currently 7%, you're roughly paying 2% upfront to bring the interest rate down to 5%. For the first year, you'll pay 5%. The second year, you'll pay 6%. And year 3 through the life of the loan, you will lock in at today's rate, and let's say it's 7%. It's a great deal for buyers to get them into a property and be able to afford their payments. And remember, you have to qualify at the 7% rate, at the going rate today. Here's another great thing about the temporary buy down. You as a buyer don't pay to bring down your interest rate. In today's market, you'll see it with new construction a lot where they'll advertise 5% interest rate or 5.5% or even 4% interest rate. And on the resale market, sellers are getting used to pitching in for the temporary buy down for the buyers. Another advantage of the temporary buy down is the money that's paid up front is held in an account, and at any point in time as a buyer that you want to lock in your rate or refinance, the money that you haven't used is still in an escrow account. So most lenders are not going to charge you to refinance. In essence, if interest rates are 7% or 8% today and you get the buy down to 5% and you see interest rates come down to 5.5% or 6% before it matures, you can lock in at that rate without any penalty. People are buying homes and saving a ton of money right now using the temporary buy down. Whether you're buying new construction or a resale home, this technique in temporary buying down the note is very, very popular. Now, we've discussed the permanent buy down in buying points, 4 points for every 1%, and the temporary buy down. But let me show you a technique that a lot of people are using right now, using the temporary buy down to actually save a ton of money, build equity faster, and pay off their note much quicker. Now think about this. If you had to qualify at 7% and you are on a temporary buy down at 5%, and the difference between the payments are, say, $300 a month, but you, as the homeowner now, the borrower, pay the additional $300 a month, that's $3,600 a year that's going to come off of your principal. The advantages of actually paying more every month and using this type of program are massive. Number one, you pay off the home much sooner, which means you're building more equity, and you're also getting more appreciation on your dollar. For every dollar in which you're spending every single month, you're seeing a bigger return. Look at making your mortgage payment as paying yourself. You're getting yourself out of debt. You're paying off a debt. So you're technically paying yourself. This also builds more equity in the property, which means as you get more equity, you can start to use your property to pull money out to buy other properties if you're looking to build legendary wealth or generational wealth. Now remember, none of this happens overnight. It all takes time. So as a buyer, you have to have a big picture for the long term. If you have any questions about either of these programs or any comments about these programs, feel free to leave them below or reach out to me direct. I'll be happy to talk with you about it. If you have found the information helpful in this video and you want to stay current on all things to do with real estate, click subscribe and the bell so you're alerted every time I upload another video. Until next time, my friends, make it a great day.